Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. I know the travels were late, but you made it. Welcome to Digital Currents.
Nah, happy Friday. And, we had dinner together last night and celebrated Catherine and Andy from Fairfax's big victory in the Innovator of the Year award. So very excited to be there with them in New York City. Had the Dark 30 flight this morning and got back here to Chapel Hill and actually heading back right after we record back to the airport to head up to South Bend for the big game. So I see, we both have our navy blue on today. Mm-hmm. Can we channel each other? I didn't go with Bitcoin Orange today because, I am headed out right after we leave. So I have the green for Notre Dame, but I did wear the, rest in peace Bitcoin sock game today because look, everybody, is jumping on that bandwagon again. It has been a tough couple weeks since October 6th. Actually tough 11 days, basically, straight down about 20+%. So we can talk a lot about that. Peter Schiff jumping on the rest in peace Bitcoin meme. It's so funny in that, gold is up a lot this year. And in fact, starting to get to the point in the last couple days of going up so much every day that it seems like it's telling us something really bad's going to happen. Like something's going to break in the banking system or in the markets. But that aside, yes, year to date, gold is up more than Bitcoin. But if you just back up a few months and look at a year, Bitcoin is still up more than gold, and it's up more than gold over just about any period since its inception 15, 16 years ago. So I don't know. Peter's great comic relief, and I think he just does it for the attention on Twitter. So
yeah, we find, Mark, isn't that often the case? We were in that room last night with the best CIOs in the business, globally, whether that was from pension funds like Catherine and Andy, who are number one in the charts and number one in our hearts.
That's right.
It's, folks on the endowment side. So a lot of your old elk, and you, in some ways, Mark, showed them the playbook and the strategy, but they still have to call the plays at the right time. And so, when folks are looking at Kathy and Andy up on the stage and they see the success that they've had, and then they ask, I don't want to say basic questions, Mark, but they'll say, well, how do I talk to my board about crypto? I said, well, we did an episode about this 4 years ago, right? And so when we look at these kind of retreats, and so, we're talking about things like 19 billion getting wiped out on levered positions, which kind of does an effect of bringing down the cost. I keep going back to the holiday quote at the Yusko family. Oh, I missed it. It's like, no, you really didn't. There's still time to kind of come back in, because I think now we've achieved escape velocity, but the vol is real. And we had some good conversations about folks and their views on this kind of inflationary market and what that means for interest rates. And of course, we've seen Bitcoin really respond to some of those sentiments and the underlying fundamentals of the system, which is why it's so powerful, right? You got to fix the clock.
Yeah. And, the other part of it, look, today, so we're recording this on Friday, the 17th. And, the big drop overnight, while I was getting the few hours of sleep that I got, is occurring because, it's witching day, options expiration day. And,
Right.
We've talked about this ad nauseum that, look, the advent of futures in any commodity market creates a potential issue, which is people can now create whatever said commodity is, gold or wheat or oil or Bitcoin, out of thin air. Literally, they can write a contract and be long or short said commodity without actually having the commodity. And the existence of paper assets can skew, or to go back to Leo Melamed's quote, right, the head of the CME back in 2017, he said, I don't know about all this talk about Bitcoin, right? We'll just regulate it. We will legislate against it. We'll create, tools to tame it.
Mm.
And tame is a really interesting word, and it's intentional, and it's one of these things where when you financialize a commodity, the big players with big pools of capital can, in short term periods, not long term, because you look, gold was stuck at $200 for a very long time, and then they lost control and it kind of went to 400, and it was stuck at 400 for a very long time, and then it spiked up to a couple thousand, and then they lost control of that, and so gold is now in this kind of short covering, spiky kind of rally. And the same will happen with any commodity, because at the end of the day, the commodity and the supply and demand for that commodity is going to rule.
No doubt.
In the short run, anything can happen. But that's certainly part of it. The other part is, and this is real, and in every cycle, when we start getting above fair value, the leverage comes in.
That's right.
And at first it's not bad, right? It's just traders using a little bit of margin debt, maybe half a turn or a turn, no big deal. Maybe it's, the advent of levered ETFs,
Yep.
Again, they have the highest level of those in history. Now they just released 5 times levered single stock ETFs. Oh yeah, that's a great idea.
That sounds like it was created in Macau, which is literally a gambling island off of the China mainland. They would love a 5x levered position.
Yeah, look, that's going to end in tears, and we'll talk about stock markets and valuations, and how much destruction is going to be. But at the end, what happens is the gamblers come in. To your point,
right?
The people from Macau, right? They lose all their money in Macau or Vegas, and they still need to gamble, so they come to the stock market. And this really happened during lockdowns, right? You couldn't go to Vegas. So they started trading penny stocks, and they started trading options, and so now the bulk of options are 24-hour expiration. I mean, that's literally buying lottery tickets, literally.
Yes.
And so you've got the gamblers that come in, and unfortunately there are people out there, I won't name names, but Binance and Bitfinex, no, I will name names, and a bunch of others that will give you 20, 50, at some points, 100 times leverage. So you put 1% down and they'll give you the rest in leverage. And the problem is it doesn't take a very big move to have your equity wiped out, and then these people seize your coins. And so you mentioned the 19 billion that came out a week ago Friday, when Trump did his whole announcement after the close, and a bunch of people just got liquidated, and some altcoins literally went to like zero. I mean, one atom went down to a penny, so effectively zero, only momentarily, and it bounced right back up. But what's happening there is these exchanges are seizing people's coins. I mean, they're literally taking them. I might argue stealing them. And because it's an artificial pricing, right? The price of Atom didn't stay at 1 penny. So the people that got liquidated, well, if you would have told me I could post collateral, I probably would have. I mean, it wasn't me personally, but maybe they would have. But no, you didn't have the option. You were just automatically liquidated. And so, there's rumors that CZ was going after Wintermute because, there's a feud there. Maybe that was it. But last night, another 500 and something million dollars of levered positions got, obliterated. And it's good that the leverage is coming out of the system, right? And it's good that we're now closer to fair value. I mean, fair value, I asked Tim Peterson, who's my favorite guy on this. He runs the best Metcalfe's Law model. What fair value was, and he sent me his model, and it's about 91K. And some will say, "Oh, it's too low." And my number was around 105, but he had some good data that updated that. Transaction volumes are down a little bit, and transaction sizes are down a little bit, but whatever, whether it's 90 or 100, but it's somewhere in that range. So now we've come closer to fair value, which normally in a deleveraging cycle, you're starting from way up here and you got to go way down to get to fair value. And then you can't put on the brakes. So you slam right through.
Well, good conversation too, Mark, with SWIB, who was sitting next to us, and they got honored as well, the state pension board over at Wisconsin. And a good question by, one of their rising stars, when they said, well, how do you stomach the volatility? And I quoted us from the other week where we said, well, the entry point of where we came into this is what Bitcoin will change in a day, right? So we've kind of got to the point where, the vol has been cut in half over the last 6 months, going from an 80 vol asset to equivalent of Starbucks levels of volatility here at 30 or 40%. But Mark, I want to get your take on this with the idea that we're talking about perps, and we're talking about like this kind of behavior and this maybe incentive for bad behavior. If you looked at what had kind of given Bitcoin its relative attractiveness, the scarcity, it was the hodlers who historically did not sell. But the idea of the perps market is that you can have the option to come in and out relatively quickly without needing to hodl the underlying asset.
No,
it's this dual track here, Mark. What do you make of that?
Well, it's the difference between a commodity market and a financialized market. And, financialized markets are going to be played by market participants, market makers, speculators, right? The opposite of hedgers, gamblers, traders, investors. And that's good long-term, but it does allow for these short-term aberrations from fair value in both directions. And it's so funny. I love the event. So it's CIO Magazine, it's their annual awards for, the CIO of the year in each category, Innovator of the Year, and a bunch of the next gen. They pick, the next gen of people who they think will be CIOs someday. So really great event. But it is interesting listening to, a handful of conversation whenever, they read Morgan Creek Digital. Oh, what do you guys do? I'm like, oh, we do investing in the ABCDs, the digital age, a little bit of digital assets themselves. And like, oh, to your point, how do you handle the volatility?
Yeah.
Like, do you own any Amazon? Well, of course I own Amazon. Well, Amazon has higher volatility than Bitcoin, right? Like, no, it doesn't. Yeah, it does. In fact, I always love this story. So Amazon, right? Been a public company 28 years, every year, including this year, right? Double-digit drawdown. The average is 31%. It did exactly 31% this year. Wow. Think about that. It went down 31%. You lost a third of your money on average every year during 28 years. But when was the right time to sell it? Never. Mm-hmm. And they don't think twice about owning 5-6% of their whole fund in Amazon, or 7% in Apple, or 8% in NVIDIA that has significantly higher volatility. But it's what we're conditioned to accept. And look, every new asset, you can go back to the very beginning of equity markets, and none of us were alive, but you can read about it if you read history. When people were introduced to owning the equity, right, the volatile equity, not the bonds, right? If you own the bonds of a business and they don't pay you, you have a legal claim on the assets of the business. It seems like a pretty good deal, but you don't get paid very much for that. The real problem with the bonds is what we just saw with First Brands, right? Sometimes the company cooked the books, and so that claim you thought you had, they've given to 4 or 5 other people. I mean, this First Brand story is literally crazy. I mean, they pledged, they rehypothecated the same assets to multiple lenders. So, you say, hey, Mark, I need some collateral for this loan that I'm making from, First Bank of X. And yeah, I got this big factory over here in Cincinnati. I'll pledge that. And then they go to the First Bank of Y and they pledge the same asset. And then they go to First Bank of Z, and they did it like 5 times. And now it turns out that you can't sell a factory 5 times. You can only sell it once. And oh, by the way, it's not worth as much as you thought because it depreciates. This I'll tell you again, total sidebar, non sequitur. This is what's going to kill the AI bubble. This idea that the assets live forever and don't depreciate and don't devalue and aren't going to be technologically obsolete.
Sure.
I mean, I was just, we'll see if this is as good as it appears. But I was up in DC on Wednesday, and a buddy of ours, Kirk Rostron, called me up and said, "Hey, there's this company that you need to see." And I'm like, all right, and we couldn't actually make it work, but in the process of trying to make it work, I dug in a little bit to what they do. And they're AI specialists, and all of them Chinese, which is interesting. And they have built technology that is NAR, non-autoregressive. Now, Mark, what the hell does that mean? That's okay. Well, all of AI, right? All the Hinton, Google, OpenAI, all the stuff is autoregressive. It uses GPUs to process autoregressively, meaning in order from left to right, sequentially. Now you can do a lot of sequences together. That, if you link a lot of GPUs, then that's how you get the parallelism. But at the end of the day, each time you iterate, right? The word in the, when it's figuring out, every time it's waiting for that next word, it has to redo every previous calculation, which is why the energy usage isn't linear, it's exponential. And so these guys are like, well, what if we did non-autoregressive analysis and we did true parallel processing? And so they have software that they claim, and there's some evidence based on peer-reviewed journals that it works. That will cut the demand for energy orders of magnitude. I mean, I don't know the exact number, but we won't need this, 60 gajillion watts of power that Sam Altman thinks he needs to raise 10 trillion with a T trillion dollars to spend. And then the craziest thing, and I'll stop talking. The craziest, this morning, someone was saying, yeah, I hear all the haters saying that, we're not going to need all this power capacity. It's all these data centers are going to end up mothballed. And he says, no. They'll be used. They'll just cut the price. And so if it costs X, you have to charge X plus in order to have a profit. You can't charge X minus. So but the nonsensical kind of, this must be it because these very small, and it's a small number of people claiming it's the only answer.
Sure.
The only answer is innovation and technological progress, which is what we've had every single time. I mean, I'm old enough to remember when Bitcoin mining was going to use up all the electricity in the world. That was actually a thing.
Correct. And we speaking of that, it was part of that fear and concern that led towards the evolution from proof of work to proof of stake. So what about Ethereum and the altcoins in all of this frenzy? Well, we covered this back in the summer, Mark, where we were discussing Ethereum being this risk on, risk off asset. Well, guess what happens? You get what you wish for. And so when the panic starts and the fear, they're going to be hit way harder than Bitcoin. And if you're thinking about this kind of flight to quality, ETH has been recently outperforming BTC because of the volatility, right? Volatility works in both ways. It goes up, it goes down. But then, of course, Mark, I had to get this little jab in. Some of the altcoin markets, they went smaller tokens as much as 80% Doge around 50%. And of course, the XRP Army, 42% down. And then, the interesting response though, Mark, I mean, the numbers are one thing, but what about the response from the institutional financial community? So one person that was honored at the event was, or institution rather, was BlackRock, although it was not for their innovation icon, which would have been the ETF on the Bitcoin. It was something else. But Larry Fink had a quote and said, "It's our belief that we need to move rapidly on tokenization and bring traditional finance on chain." So almost on cue, they announced the launch of a new fund, the BlackRock Select Treasury-based Liquidity Fund. I mean, that just rolls off the tongue, Mark. It is the
Treasury-based liquidity.
Yeah, exactly, right. And so it's a retooled money market tailored for stable coins in compliance with the Genius Act. And it'll be kind of this, idea to be this reserve manager for this fast growing sector that could reach 4 trillion by 2030, according to Citi. But it's just kind of one estimate. I think the idea here is that even though there's this vol, there is still a fight to quality. We've spoken a lot about the hegemony of the US dollar being reflected by stablecoins, but you have to be careful if what you wish for with the
4 trillion X. So, I mean, don't be so conservative. Paxos minted 300 trillion the other day.
Right.
I mean, they fat fingered supposedly a $300 trillion mint. And
that sounds like someone sleeping on their keyboard, Mark, right? You just kind of fall asleep and then
you just fall asleep and it's just got a whole bunch of zeros. And then they caught it and then they burned it. Well, then when people really dug in, no, they had actually made a mistake with 300 billion before that they had to reverse, and you're not supposed to reverse it. But the bottom line is, someone asked the great question, says, well, what was it backed by? How do you mint something? Because a stablecoin supposedly is backed 1-for-1 with a treasury or a dollar or a yen or a euro.
Yeah.
So how do you just mint out of thin air? That's no different than fiat. And look, the Paxos guys, they're Notre Dame guys, and I shouldn't, poke fun at them, but this is bad. I mean, this idea that Uncle Larry at BlackRock wants to now corner, he cornered the market in Bitcoin ETFs, right? Fastest to 100 billion in history. Now he wants to get his mitts on stablecoin area. And look, I am somewhat skeptical of concentrating all the control in any one place. I know people are Tether haters and Tether truthers, and I don't love the fact that it's run by some seemingly dicey characters and they won't audit their books, but it has functioned pretty darn well. And
they got a lot of gold too, Mark.
Yeah, and they bought and there's actual evidence of them buying real stuff. Like they are the, I think, 8th largest owner of treasuries in the world today. Like that's an auditable thing.
Wow.
And so maybe they're not backed perfectly 1-to-1. I don't know. I don't have any special insight, but at least they're not just minting stuff out of thin air. When they create a tether, there's at least a transaction that seemingly we can trace, and they've also been doing it a long time. And look, there's going to be glitches and there's going to be hiccups along the way of tokenizing everything. And it is kind of funny. And I really don't mean this in a braggadocious way. I think it is interesting. I mean, Morgan Creek, we actually did coin the term OCIO. Now, why did we do that, right? Outsourced Chief Investment Officer. It's because Outsourced Chief Investment Officer didn't fit on the PowerPoint slide. That is not made up. We shortened it to OCIO back in 2004. Now there is a whole awards thing for, a category for OCIO. And, congratulations to Cerity Partners for winning that. And where was I going with that? There was another term.
Thanks on the slide, Mark. Just seeing the OCIO and bit. I was looking for our citation.
Yeah, little trademark.
Right.
But no. I was thinking of another term, and now it.
No. Well, before you come up with that, Mark, I think you were kind of on a couple of different points with remember the conversation we had during cocktail hour about the compounded annual return of the Nifty 50 from like
Yes.
early 50s into
Yes.
late 60s? And so
Yeah.
that was 30% with the sharp ratio below 2. In the last 5 years, so your point about concentration, the last 5 years, the Mag 7, their compounded annual rate was 40% with a sharp ratio under 2. So it shows this intense concentration where if things go right, you can do really well. But obviously there's this fear of the unwinding. So now startups have gotten into this game too, Mark, with the idea of there's a Chinese fintech, the Ant Group. They launched their first trillion parameter open source language models, is rivaling DeepSeek and OpenAI. So you're not seeing any kind of like slowdown in that space. And also another group, Nscale, which launched a big deal to buy 200,000 NVIDIA GPUs, or just add another 1.2 gigawatts of power. What's the difference really
Yeah,
between?
who cares if it takes 5 years to get permits and build? Oh, I remember what I was going to say. So we were talking about Larry Fink,
Right.
and it is kind of fun to see, one of the most powerful people in the world say this thing that we've been saying for 7 years. Like
Right.
for 7 years, we've been saying tokenize the world, that every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every private business will be tokenized. And now Larry's on TV saying the same thing. And if he says it, it's going to happen. If we say it, maybe someone would listen. But if he says it,
Right.
it's going to happen because
Right.
it's logical, it's rational, it's normalized now to go we went from analog to electronic. No one questions living on your phone all day, every day. No one questions your money isn't really money, right? It's ones and zeros in a bank account, electronic, that they control and you have to get permission to use. No one questions the electronic age. Well, now that we understand that there's this better way, digital, and I always use the simple example of music, right? If I have an electronic copy of a song, right, that I'm learning how to play on guitar, I can send it to you. I can just copy, paste. I'm happy, you're happy, music industry less happy. Now we stream our music, so I can't share with you because I have to pay, you have to pay, music industry happy, artists are happy, writers are happy because everybody's getting paid. So the movement from electronic to digital totally is going to happen. I mean, we will go from offline, my childhood, online to my kids' childhood, to on chain, right? My grandkids' life. And on chain is superior in every way. And this idea that suddenly it's going to create this dystopian future where we use so much energy, I'm like, well, it doesn't have to, and it actually won't, because the innovation will occur in the same way that the first Bitcoin miners were really inefficient, and they took a lot of joules to create a terahash, and each successive innovation, the ASICs get better, and there's cooling technologies, and now a lot of the power isn't coal fired or oil fired. It's solar and wind, although those aren't necessarily perfect, but they water, hydro, a lot of it's hydro, which is the most efficient. But it's just even little things. Like I saw this the other day. They now have a very cool, instead of a big giant windmill, the big giant things that you drive by, they have this. It almost looks like a thing you'd have in your backyard. And it's probably did use AI to create it. And it's this engineered, and it spins around this way with very small amount of airflow and generates, not the exact same amount, but you can have a lot more of them because they're small and create more electricity than these big wind turbines that it's so funny. No one ever thinks about, well, what happens to those big giant blades when they crack or break? They go to the windmill graveyard, right? Which is a pretty ugly place.
Yeah.
Not very environmentally friendly either.
Yeah. But to your point about the timing and maybe the difference between you and I and Larry, we make proclamations to see something happen in about 7 years, right? When Larry says that he's telegraphing what's going to happen in
Yes.
the short term for
Yes.
those that are paying attention, like their investment in securitized mark to this idea of, tokenizing assets, a company that is really a leader in this real world asset tokenization. And they're considering hitting a SPAC, and they are backed by what company? BlackRock, right? So that amongst others. So his idea of this is very much a anticipation of those that are going to be participating in these moves, and we've benefited as well from the IPOs that hit last month, and there are some others that are kind of enjoying this movement. But I guess I want to maybe circle back to this idea of perps, and I think it segues into the chart of the week, because the idea with perps is that you have some of this trading happening on the centralized exchange, but you have a huge amount happening on the decentralized exchanges. So
Yes.
there's kind of this really interesting dichotomy, Mark, where on the one hand, perps are done by some very in large scale, concentrated, sophisticated traders, which are sometimes large financial institutions, but the activity, a lot of that bulk is happening sometimes in these decentralized exchanges. So you're not really seeing that on like a Coinbase as much,
Yeah.
or
Yeah.
guys. So we wanted to profile one, and I'll kind of go and share the screen and talk a little bit about Hyperliquid, right? Which is this
Yes.
huge new trend that's kind of showing exactly this new move. So I will share my screen and let me know once that pops up, and we can dive a little bit into what we've been seeing with them. So basically, yeah, they were a once obscure platform, and let me know when this pops up. But basically now they're processing billions in perpetual futures volume, and they're drawing back from Paradigm and Pantera, Atlas, founded by former traders, and so now they've got over 500 million in assets, which is not nothing. But I guess the idea here is the speed at which this is happening, right? So they're the new kid in town. They've got 1 billion in crypto. That's kind of now blending this new speed. So and here it is. I'm putting it right here on Bloomberg, which is just wild, right? So the headlines on Bloomberg emerges a crypto money making machine, right? It's generated tens of millions on a monthly basis. And so some of these things, Mark, to me, I am a little bit scared by this. When I see something that's listed on Bloomberg in our industry as a money making machine, from something that uses a 1, 2, 10x, you mentioned 100x leverage type of products, that to me signals
Well,
a little
it
bit.
goes to kind of why we got into this business in the first place. Morgan Creek Capital Management has existed for 21 years, and we focused on financial services and outsourced chief investment officer and fund to funds and direct investing and co-investing, and so we are steeped in financial services. And so when blockchain technology came along, we pretty quickly, not Dan at Pantera was first, and the blockchain capital guys were second, but we were kind of third to say, this is going to be a really big thing in financial services. It's why we ended up co-leading the Figure deal, because Mike was like, hey, I know these guys. They're financial services guys, and we're a financial services company. We're going to disrupt financial services like lending and HELOCs. And so we started making our investments in businesses where blockchain would allow disruption of these traditional financial services and strip out the massive, right, $7 trillion a year at banks and brokers and insurance and audit and all these things that can be streamlined and cost reduced in the blockchain world. And exchanges are a huge example. So we were early investors in Coinbase, and we we didn't do them all, but we've had a number of other exchanges in Asia and in LATAM, and so exchanges was an easy investment area. And then there was, financial services like lending, and there's financial services like custody, and there's financial services like wealth management. And we've had a number of great investments there, like Bitwise and Amun. And then you look at something like this, which is when you think about the, CFI, which is, there's TradFi, there's the old traditional finance that is eventually going to move to DeFi, okay, which is decentralized. But in the middle, there's this CFI thing, which is you kind of have a helpful hand organization, and the maxis hate them, but Binance is a great example. I mean, Binance is ginormous, right, in terms of their volume and how much of global trade. And so they are the picks and shovels. What I'm getting to is all of this is the picks and shovels. And Hyperliquid is a great example of this. It's decentralized, but not all the way to total decentralized protocol. It is a classical trading platform, and it's not exactly the same, but in a similar way, like Interactive Brokers, right? Interactive Brokers is it's interesting because it's not actually a broker, right? They actually don't have a broker-dealer license. It's a software platform, and it's amazing. It was started by like I think he was 62 or 63 when he started it, and now he's one of the wealthiest guys in the world. And it's this juggernaut because what they do is they make it easy for people to trade anywhere in the world, any asset. And then they have these relationships with local brokers to execute the trades, but they do all the software back end, and they just make it seamless and easy. And I think Hyperliquid kind of did the same thing. And this was a young guy, and I can't remember how young, but he kind of wrote the code himself, and then he hired some people to help him. And he's built this thing pretty quickly. And to your point here, if you can make $50 to $100 million a month, and that's real revenue, right? We have companies now trading at $15-16 billion valuations with zero revenue in the nuclear space and the quantum computing space. And now I think all those things will eventually go to their natural home, which is zero. But this is a real business doing. Now, we can discuss, as we have, that maybe 100 times levered perp trading isn't exactly the thing that we want everyone to be doing.
Right.
But you can say, I don't like gambling. I don't like Las Vegas. I don't like Macau. Fine, don't go. But they're going to exist, and they're going to create billions and billions of dollars of revenue because there are people who enjoy that. This is kind of the same thing. And the house always wins.
Sure.
The house wins. And so investing in the house is, and we did miss this one. But there are others that we have invested in that are doing similar types of things where they're creating real revenue. They're taking a scrape of the transaction volume. And so, they don't care if the market's rising, the market's falling. They just want activity.
Sure. And I think really well said, Mark, and that, the real point of it is you're going to miss some, and that's okay, because what this is really kind of showing is that you can have a small code-driven team redefine a market, right? So in this case, they were able to kind of come up from relative obscurity, and they're also kind of like blurring this line, right? Because they have a NASDAQ listed fund that's providing like institutional exposure to their HYPE token. And so they are kind of blurring that line between exchange and blockchain. And they're really kind of testing, whether, this next major market operator can really thrive beyond the traditional, regulatory framework, because they have, broader apparatus, but there is still some criticism, Mark, because they've got the transparency, they've got the fully on-chain piece, but then there's questions about the governance, because if you're small and you have a foundation that's able to do, 1.4 billion in buybacks, You can influence what's happening there. So our notion of decentralization gets questioned. So I think that there's still
Yes. Yeah.
opportunities
I mean,
for,
this is still CeFi.
yeah.
It's more centralized than decentralized. The other thing that's great about this, in my mind, is there are some early movers on the central or decentralized exchange, the DEXs,
Mhm.
and they issued tokens. And the problem was the tokens didn't really share in the revenue. Uniswap is the best example. So the Uni token doesn't really get you equity in the Uniswap business, which would be nice. It doesn't get you debt. It actually doesn't even get you a share of their revenues that they scrape. So it's and there's been talk that maybe they'll get the governance to change the rules and make Uni 2 or something, and they just never get around to it. So the token kind of just languishes. Because if you don't really have a claim on cash flow, you're really kind of a meme coin, and that's not necessarily a bad thing, but mostly it is. But this is different, right? The hype token here really is
Mhm.
sharing in the revenue generation potential. And um, I I find the speed to scale at some of these types of businesses pretty extraordinary.
Yeah.
It does well, but it's in some ways it's natural, um, because one, there's been so much wealth created, right? We're talking trillions of dollars of wealth from just ideas 15 years ago in the digital space. There's also just been a lot of fiat printed, and that's partly why gold is going up so high, is the recognition that geez, there's a lot of fiat out there. And look, if gold's rising and the bank stocks crashing here this last week are telling us that all is not well in the state of Denmark,
Mhm.
um,
Mhm.
what's going to happen? Well, the Fed's going to start doing QE again,
Mhm.
and they're going to lower interest rates aggressively. And if you look around the world, central banks around the world are lowering interest rates as if we're in a recession. And
Yeah.
despite all the taco Trump on again, off again, trade war, and I love China on all this, and she is just like, whatever. When you're done being blustery, just we'll talk. But until then, just knock yourself out. But this too shall pass.
Sure.
Options expiration will be done in a few hours, and we'll be back on the releveraging trade. Because remember what these guys do, right? The futures price is higher than the spot price, so you go uh, long the future and short the spot, and you roll down over the course of the month. And then at the end of the month, you need to cover everything. So you're shorting or selling. You're selling all your longs, and that puts pressure to close that gap. And then it starts all over again on the next month. And that negative roll yield has existed in every commodity that's ever had futures on it, and it's why the ETFs around this are so terrible, right?
Mhm.
Because they're just constantly fighting against that negative roll yield, the GSCI, and all that kind of stuff.
Right.
But look, at the end of the day, um, the technology is what matters. The innovation around it is what matters. And this game investing is really, I mean, it's hard, and it's not easy, but it's the concept is actually pretty simple, right? There are only a small number of things you get compensated for: risk, right? Credit risk, equity risk, illiquidity risk, and leverage, and that's pretty much it. Betting on innovation is the thing I always say is like the fifth way. Um, but you have to have courage, and you have to have discipline, and you have to have a long time horizon, which is why institutional investors, excel, because they can do time arbitrage, on the rest of us who have finite lives. But even in that finite life, you can take a long duration view and take advantage of of the risk premia that you are given over long periods of time.
No, well said. And as we close out, you're looking at around 70% of all trading and volume happening in perps so far this year, right? So it's a huge move. And at one point, Hyperliquid accounted for 75% of all trading on the decentralized exchanges. And that's a huge movement because, they're the fastest growing in terms of where this move is. It's around 17% is happening, in decentralized exchanges. And I'll give a shout out, since you mentioned funds in closing, Mark. I'll give a shout out to Luxembourg in closing, becoming the first country in the Eurozone to adopt from their sovereign wealth fund an allocation into Bitcoin ETFs. So they are now kind of, signaling what you've been saying, Mark. And maybe they picked a really good time because prices are a little bit lower. So, they can benefit of the upswing. So that, amazing. So we'll have to thank everybody for tuning in, and for those that won last night, congratulations. But it was just great to be in a room full of innovators. So we'll remind everybody to rate, review, subscribe, and as always, to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.